the quick way of making money. I'll just put in a trade, or maybe I'll follow this Telegram channel, and that guy will tell me what to buy, when to sell, and that's how I'm going to make money. Well, this is the worst method to trade. You'll enter at top, you'll exit at bottom, and most probably you'll end up holding your losses.
The first person who gave right explanation about using social media. Definitely social media is very useful, but we have to use it that way. That is important. And also when we are dealing with stocks and everything, there are experts sitting there. Definitely they are registered. They have been given regulations, guidelines to follow. You people will be guided by them. That is important.
In markets, success comes from not picking bad stocks in the first place. If I have to give examples, we have Vodafone Idea, which earlier used to trade at say 300, 400 rupees. Now it's down to 10, 12 rupees. On the other hand, we have stocks like Eicher Motors that used to trade around 800, 900 rupees, and now these stocks are at 9,000 rupees.
IT sector mein something is off and the markets already know it. Layoffs, hiring freezes, project cuts, but it's not AI. This problem is called nearshoring. Work that used to come to India is now moving closer to the Europe and the US. Less outsourcing means weaker earning visibility. Simple. And the charts have been flagging this for months now. Look at the Nifty IT index. Nifty is at all-time high, but IT is clearly underperforming. This divergence isn't noise, it's stress. So if you have any IT heavy portfolios, it's time to stay alert, track the sector trends, and follow for insights you won't find in the headlines.
Joined by a special guest from Mumbai. I'm telling you, this is a very important person. He is the youngest SEBI registered research analyst, and also he's a national level air pistol shooter. Hello, Arjit Garg joining us from Navi, Mumbai. Arjit ji, thank you so much for accepting my invite. Welcome to Undefined Podcast. And before I start, I should definitely make myself focused on a proper conversation, since you have a pistol in your hand. So I should probably be very careful in what I'm speaking. Anyways, jokes apart, sir is a really, really big person, and which I've shared earlier in the previous video. You might have known about that. Anyways, sir, so let me start by discussing about a report released by Securities and Exchange Board of India. This is a comparative study made. This is the definitive data released by SEBI. It says that 91% of individual retail traders in the equity derivative segments incurred net losses. This is a key statistics of 2024 to 25. Now, talking about 25 to 26, I'm making a rough number here. So 90% of traders are making losses. So why this large number? What is actually happening here? What is the reason that this many people are making losses? It's more like it appears that entire structure is designed that way. Please share us your view on this.
Absolutely. Firstly, thank you so much for having me on the platform and in this podcast today. Now, coming to your question, see, majority of retailers, they make losses, and at the end they keep thinking that, okay, I believe that the system is against me and the markets are designed against the retailers.
Yes.
Honestly, the market is not designed against retail. It's designed to expose people who do not know what they're doing.
Okay.
If 90% of traders are losing money, then it's not a conspiracy. That's a skill gap.
Okay.
Think about it. Most people, they do not know about risk management. They have nearly zero patience, and they end up overtrading.
Yes.
The markets are not unfair. Markets are just unforgiving. Most people enter the market with a quick money mindset. They believe trading is easy and the quickest way to make money. And the market is brutally efficient at punishing that ideology. See, the real problem is retail investors, they don't treat trading like a profession. They treat it like entertainment.
Okay.
And markets, they don't reward excitement. Markets reward discipline, patience, and consistency. Once you have that, nobody can stop you from winning in the markets.
Okay.
So, coming back to the question, the system isn't against you, but if you're undisciplined, it will feel like it is.
Okay. Wow. Sir, as a SEBI registered research analyst, you get to see a lot of data every day. You study, you analyze a lot of data, and then you guide the investors. So when you are analyzing about a company, what are the key metrics that will tell you that this company, what we are particularly looking at, should be rejected?
See, as a matter of fact, when I sit at my trading desk every morning, I don't start by looking at the winners or the stocks that I'll have to trade today. I start by eliminating the losers first. Because in markets, avoiding bad stocks is much more important than finding great ones.
Okay.
So there are three big criteria or three things that make me reject a company instantly.
Okay.
The first one is if the price is weak.
Okay.
So if the charts are in a downtrend or they're showing no strength at all, I don't argue with it. The price reflects reality faster than any narrative would do. So if the price is weak, the stock is straight out. The second thing is if earnings, they don't justify valuations. Say if the company is trading at a premium valuation without earning growth to back it. That way, it's not a quality stock, it's just a speculation. The third is management credibility. If governance in the company looks questionable and the management credibility is doubtful, you don't have to go any deeper because no chart, no balance sheet, no financial statement can save you from a bad management. So, my approach is very simple. If I have to convince myself to buy that particular stock, I shouldn't be buying it. That's the way that I just move out of the bad stocks. I just remove the bad stocks from my list and I just focus on the good ones.
That's a perfect approach for anything that we wanted to sort properly. Talking about financial content, everybody is becoming an expert in social media. When we open social media, everybody started to give so much of tips and everything. So what is your view about this, sir? Is social media making a person more richer really, or it is just making them overconfident?
See, social media does help you understand a lot of things, right? See, social media can tell you a lot of about how the markets function, but the practical exposure is missing there, right? So maybe if you see 20, 30 reels every day in the morning, right? Say you've just woken up, you've seen 20, 30 reels. Almost everybody talks about these days, especially maybe because the war is going on. Almost everybody is talking about what's going to happen in the market. Everybody is talking about what, say, the other party is doing, or maybe somebody is attacking a lot of Middle Eastern countries. Everybody is talking about it. There are more than 30 cuts in a reel on an average. A reel maybe to get more engagement, for the reel to perform much more, maybe to get more engagement, more conversions, they would make 20, 30, 40, 50 cuts in that reel so that people can just, the retention is more higher in that particular reel. At the end of the day, when you complete watching your 30, 40 reels, you are left with just information. What can happen in tomorrow's market? Okay, maybe US is bombing Iran. Okay, this is very bad. Or maybe Iran is attacking other Middle Eastern countries. That is very bad. Crude oil is spiking and the markets might do bad. This is just information. You don't have the exposure yet, right? So that is the problem that we have in social media. Social media is not bad at all, but it doesn't teach you trading. It sells confidence.
Okay.
Maybe let's talk about some other phases of the market before the war. What you were seeing profits, you were seeing results, you were seeing confidence in a lot of people who were telling you what to trade in the market. But nobody tells you about the process and risk management behind that. Right? As I told you earlier, people consume 20 to 30 reels on average in a day. And then they start believing that they understand market. And this creates a very dangerous illusion that I know enough to trade. I
Yes.
don't need anything else. I've watched 30 reels. I know enough to trade. Let's get started. This is exactly when people start losing money, right? So the bottom line is Instagram is not making people rich. It's making people highly informed without the preparedness.
Fantastic. You're the first person who gave right explanation about using social media. Definitely social media is very useful, but we have to use it that way. That is important. And also when we are dealing with stocks and everything, there are experts sitting there. Definitely they are registered. They have been given regulations, guidelines to follow. You people will be guided by them. That is important. It's not that we cannot write exams directly for any subject without getting lectured by that particular subject or understanding the content of the subject. So that's very well explained, sir. Thank you so much. So apart from this, I had an opportunity to go through your reels which you're making in Instagram. I felt really very useful content has been shared from you, sir. Thank you so much for that. And guys, I have given the LinkedIn and the Instagram profile links in the description. Please, I think people who are interested in stocks trading, you must definitely follow the channels. So with that, let me talk about this. If someone is opening a demat account, say with rupees 10,000 today, what is the worst mistakes he will make in first 30 days, sir? I want to know your view on this.
The worst mistake, I believe they would trade too much, too fast without a proper plan. And I believe this is the same thing, same story that we have been seeing since 2017 or 18. See, 2018 was the time, 18, 19. These 2 years were the time when markets were flat.
Okay.
Barely anybody made money out of the markets. But then in 2020, we saw a huge COVID crash, right? A huge crash in the markets. There were circuits and everybody was talking about what's happening in the stock market. Right after we started seeing the recovery in 2021, late 2020 and 2021, that is when we started seeing a good rally in the market.
Okay.
Every day, every stock was giving you good returns. The markets were positive straight for 1 year. That was the time when a lot of people entered in the market, right? There's one saying that somebody told me, when your local pan wala starts discussing about stocks and start giving you recommendation, that is when you have to realize that, okay, this is not the right time or right way to invest in the market.
Definitely not. Yeah.
Right? Exactly. Right after that moment, say in 2022-23, we saw a huge jump in demat accounts. Maybe earlier we were standing at 1 or 2 crore demat accounts across India. In 2022-23, that number came up to 4, 5, 6 crore. 2024, we were up to 8 and 9 crore active demat accounts. All of them, actually majority of them, as per SEBI's information, SEBI's data, 90% of these demat accounts barely had 1 lakh rupees in them.
Okay.
And when you go ahead and question retail investors, in general, I'm not talking about targeting a specific area. You can go to any city, just pick up a guy and just ask him, bro, do you invest in the markets? How much do you really know about markets? And the answer would most likely be, Are, trading is the quick way of making money. I'll just put in a trade, or maybe I'll follow this Telegram channel, and that guy will tell me what to buy, when to sell, and that's how I'm going to make money. Well, this is the worst method to trade. You'll enter at top, you'll exit at bottom, and most probably you'll end up holding your losses. Even when your guy is telling you to sell that particular trade, you won't be able to do that. Why? Because you're starting with 10,000 rupees. You barely have anything to lose, right? So when you have a small capital, when you have 10,000 rupees, you're not expected to do very well at the market. You're expected to stay disciplined and have a really tight plan that you can repeat every time. Now, that plan should include how do you read price, how do you assess your risk, and how do you handle your losses. When you can answer all of these questions in your plan, that is the perfect way to make money from the market. Like, the bottom line of this entire conversation, of this entire thing that I've been talking about from past two minutes, is treat your 10,000 rupees not as capital. Treat it like a tuition fees.
Okay.
When you were a kid, you used to give money to tuition classes, right? Why? To teach you how to do it. The exact way you have to spend this 10,000 rupees as a tuition fees to learn how to get better at the markets every day.
So let's talk about your background for a moment. You're from Navi, Mumbai, Maharashtra. You are certified by the Giant Securities and Exchange Board of India as a research analyst and also by National Institute of Securities Market. You are a licensed air rifle shooter, air pistol shooter, I think, and you are that's the license which you got from National Rifle Association of India. I mean, this is actually a very good combination when we talk about the finance, handling the finance and holding a gun, so that no scammers will come near you if they go through your LinkedIn profile. It's fantastic. So talking about that, when you are into shooting career, when you are trying to learn things, is there anything that the shooting taught you about markets?
Quite literally, what I find is shooting and market, they're actually very similar, or I cannot stress it enough, but they're like quite really similar.
Okay.
See, shooting and market, how do they work in the same way? I'll tell you about. In shooting, you don't keep firing randomly.
Okay.
You wait, you control your breath, and then you take one precise shot. Markets work in the same way. Most people think success comes from over trading, or maybe trading all the time from 9 to 3, more activity, constant action. But that's not how it works in the market. In reality, overactivity destroys your performance.
Okay.
Be it shooting, be it markets. Even if you just go ahead and you shoot a lot of shots, you get tired very easily in shooting.
Oh.
As a pistol shooter, everything depends on my arm and my shoulder.
Yeah.
If I keep shooting multiple shots in my practice sessions, if I just go in for a 3-hour practice session, and if I shoot, say, 150, 200 shots there, I would get tired very easily.
Wow.
Similarly, in the markets, if you go on trading a lot, maybe if you're trading multiple trades, maybe you're taking 3, 5, 6, 7, 8, 9 trades in a single day, you're not just making profits. You also have to count in the multiple charges that are there. You have to count in the brokerage that you're going to pay to your broker. At the end, after calculating all of those charges, then you have to look if you are profitable or not.
Okay.
Most of the times, if you overtrade, if you take multiple trades, a lot of trades in the day, you end up paying more brokerage to your broker. You end up paying a lot more charges, the behind the scene charges that not only goes to the government, but also the exchange fees or the GST on all of the security taxes. When you calculate all of these charges, you realize that, okay, my on paper profit is say 300, 400 rupees, but after deducting all of these charges, I'm making a loss. Right? That is why it is said that over trading and over activity destroys your performance. If I have to compare shooting and markets, shooting has taught me patience.
Okay.
It has taught me emotional control and precision under pressure.
Okay.
All of this can be implemented in the markets, which again leads to a better trading activity. Not just activity, it also gives me a better process, a better strategy that I can build and apply repeatedly.
That is very
shooting.
Yeah.
In shooting, one bad shot ruins your score, and in market, one bad decision can just wipe out your cap. So that line, I think we can wrap the entire thing around that.
Entire thing is covered, and it's a superb explanation, I should say that. And this is an expert we are speaking to people, and we can understand that holding a gun for a long time is going to create pain in the shoulders and everything. And we can imagine how our Indian Army is protecting us day and night, standing in the borders with holding a big rifle in the hand. We should be really thankful to them, and definitely we are very, very, very proud of our Indian Army. So, Arjit, thank you so much. That was a wonderful explanation. And talking about another talent of yours, you published a book, Daily Equity Explorer, Navigating Stock Markets with Ease. So, this book, how valuable it will be for stock markets and also the people who are dealing with stocks and also the traders. Can you please give us a glimpse about this?
So the book Daily Equity Explorer. So when we were actually writing, it's a co-authored book. I've co-authored it with Arjit Garg.
Okay.
It's a very interesting book which deals with and it actually tells you the basics of market.
Okay.
Now I know a lot of people are going to be like, "Yare, all of this is already available on YouTube. We have free courses." I know that. But the problem is on YouTube, you'll have 500, 600 videos explaining to you about markets, explaining how to start investments. But the problem is all of those videos are unstructured. Say you have a YouTuber who tells you basics of market. The next day, the guy will tell you what is Nifty. Third day, you'll be trading Nifty options.
Okay.
The fourth day, you'll learn about stocks and then you'll come back to equity, you'll start trading stocks.
Okay.
But this is now not how it works. You learn about investments. You start with basics of stock market. What is stock market? How do I invest in stocks? What exactly is stock? You start with absolute basics, right? So there has to be a structured way to learning things. That structured way is something that we provide you in that book. And if I have to stress on one topic from that book, which I think can be beneficial not just for beginners but also for experienced people, because people who are already in the market for 3-4 years, they would also want to get a glimpse of the book, right? They would also want to check that book out, or maybe let's see what's there in the book. One topic from that book, which is like, I really like it. It's very close to my heart. That topic is stock selection.
Okay.
See, stock selection is very important because everybody thinks that success in the market is about finding the perfect stock. If you find a stock, that stock should be your next multi-bagger, 100%, 200% in a year. But in reality, that's not how it works. It's not about picking the best stock that will turn into multi-bagger. In markets, success comes from not picking bad stocks in the first place. If I have to give examples, we have Vodafone Idea, which earlier used to trade at, say, 300, 400 rupees. Now it's down to 10, 12 rupees. On the other hand, we have stocks like Eicher Motors that used to trade around 800, 900 rupees, and now these stocks are at 9,000 rupees, right? So picking out bad stocks is very important. If you have to just remove bad stocks from your list, that should be your step number one. Now, how do you do that? That is something that we talk about in the book.
Okay. So all these things, how to do that and everything, you guide your people who work with you, right, sir?
Absolutely. We have multiple communities where we tell people, like, we start from the basics, right? So the basics is learning about the markets. We have a separate community for that. When you come to the advanced level where maybe you are mature enough to understand futures and options, you want to understand, okay, how do I really trade options? We have a separate community for you. And if you're somebody who is a professional in the market, you're a professional full-time trader, we have a separate community for you to cater to all of your needs, where we talk about sectoral analysis. We help you understand the wrong stocks in your current portfolio, and we help you pick the right ones, right? So we have separate community to cater all kind of investors that are there in the market.
Okay. So guys, like, I have to say this, almost everyone in my podcast, they don't come for promoting their services. They only want to share their knowledge. They want to help people. That is the motive they come. It is me who wanted to promote everything, whatever they have, because only through once we connect through their social channels, we'll be able to learn about that particular topic. If we are interested, we have to follow them. That is how we learn. We learn from everyone. That is the reason I took this topic about the book. The book was really, really interesting, and you can find the book in Amazon. I have given the link in the video description. Definitely, you got anybody who is interested in learning about stocks and trading, definitely you can purchase the book, and it's very, very affordable as well. Wow. If India should outperform globally, let it be in stock markets or in trading, what is the macro 2 to 3 triggers that we should place that should definitely perform right so that we can achieve this performance?
Okay, on a macro level, see, this is a question which I guess a lot of experienced trader would be interested to understand. Like people who are into long-term wealth building, people who are maybe trading the markets from 8 to 10 years. For them, it is very important to understand if the India growth story that everybody is talking about Like we have a lot of missions, right? The 2047 mission, and we have the India growth story, and there's multiple things people talk about when they talk about the long-term growth of the country, right? So there are three main things that you have to look out for. First, the earning growth. Within India, there are multiple companies that are listed. We have large cap, mid cap, small cap, multiple companies in the stock market.
Okay.
We don't just have to look at what on a macroeconomic level, what the country is doing. Not just that, we have to look at individual stocks also. We have to look at how the earning growth is doing. See, the earning growth has to deliver, not just promise. India has a very strong narrative, but markets, they don't reward narratives, they reward earnings. If corporate profits don't grow in line with the valuation, the outperformance won't sustain for long, right? The second point is policy stability and execution. The government is doing awesome things around a lot of sectors, right? People have been talking about infrastructure, defense, and a lot more sectors. But the policy around not just these sectors, but also around different themes, that is important. We are seeing strong intent in defense, as I talked about. We have manufacturing. The government is constantly doing huge capex push, but intent is not enough. We need execution speed and consistency. That will translate our story into returns. And finally, we have the global macro environment. Now, I know when we talk about macros and when we talk about globals, the best thing that we can think of right now is the war that is going on in the West Asia.
Yes.
But trust me, this war is just a short term thing. What we also have to focus is the bigger picture, the US interest rates, the liquidity cycles, and the global risk appetite. Now, right now, from the West Asia war that everybody is really interested into from past 1 month, this war is taking a toll on the risk appetite globally. This war is not just affecting the Indian markets, but it's also affecting the APAC markets. It's also affecting the European markets, right? It's also affecting the South American markets. So we have to look at the global risk appetite as well. At the end, the big picture is very simple. India has a story. Global markets, they also have a story, but only earnings, execution, and global support will turn the India story into a sustained outperformance.
Okay. Wow. That's very, very interesting. War has definitely created a headline. Let it be for the stocks, let it be for the news, whatever it is. This has really caused a very, close watch for all the people. Everybody are stuck to the television and the newspapers for quite some months. I'm going to ask you a scenario-based question. Say you're back again, 21 years, and you're starting with 50,000 rupees in your hand, and you're asked to build wealth. So how will you build wealth for next 10 years?
Okay, so if I have 50,000 rupees in my hand, see, even if I have right now, I don't have to go back to 21 years.
Okay.
If I have 50,000 rupees right now in my hand, the very first thing that I would do is I would never try to convert this 50,000 into 5 lakhs quickly.
Okay.
Like this is the mindset that almost everybody has. My was 50,000 rupees and I'll try to double that money, or maybe I'll try to get 10x returns very quickly. This mindset is exactly what destroys beginners.
Okay.
50,000 rupees, okay, for some people it's a big capital, but trust me, if you're here for the long term, 50,000 rupees is not a life-changing capital, but it's enough to build life-changing skills.
Okay.
Skills that will really help you ace everything in the market, not just in the market. If you apply these skills anywhere in your life, you'll do great. So to begin with, what I'd really do with the 50,000 rupees to build long-term wealth, the first thing that I do is I treat this as a training capital, something that we've already discussed in our session with a 10,000 capital example. I would treat this as a tuition fees, a training capital. Things like trading small or focusing on learning price action and making mistakes, but controlled ones. Okay. Because early on, the goal is not returns. The goal should be consistency and survival. Once we have all of that in place, we'll move on to building a repeatable system. A system should always answer the following questions. Questions like how to manage risk, how to handle losses, and what setup really works for me.
Okay.
Once we have all of these set, we will start refining this system.
Okay.
Early on, the system would look very rough. Maybe you would miss a lot of opportunities. Maybe you would not get that high returns, or maybe you would had a huge loss. But when you start refining the system, that is when things again they just come back into place. Right? Now the important part here is not to copy strategies from others. A lot of retailers do this. They would watch a random YouTuber, they would see their strategy, and they would just copy paste that strategy in their own system. But the edge here is the way to win here is build your own strategy and find your own edge. Once all of this is in place, once again, we'll come back to the next step. The next step is to scale our trading ecosystem. To scale this entire activity that we're doing with 50,000 rupees, we have to scale this not just with returns, but with an additional source of income as well. Now, this point is where a lot of people get it wrong. What people try to do is they try to grow wealth from trading. But the right way is by increasing your active income source, adding capital in your demat account regularly, and using markets to compound this, not gamble. People usually, as I talked earlier, people used to think that we'll convert this 50,000 into 5 lakhs. This is the wrong mindset. Having an ideology of making huge returns, that is good. But if you try to get quick money, you would not be investing your money, you would be gambling with it.
Okay.
And in the markets, we are not here to gamble. We are here to use the markets to compound our returns in order to make huge returns over the long term.
Okay.
Right? So the 10-year plan, if I have to just comprise the entire thing and if I have to just summarize it, the plan would be learn first, then learn to survive, build the skill, add your capital regularly, and then compound everything from the markets.
That's a perfect roadmap for us. Thank you so much for sharing that. I wanted to grow quickly. That is not going to work. We have to grow consistently and properly. That is going to work. Thank you so much for managing the risk. That is where person loses his stability. So what is your personal framework for managing risks, especially during drawdowns?
All right. So when we talk about drawdowns, now a lot of people handle it very differently. So drawdowns ke time pe, when you look at a professional trader versus a newbie or a person who's really new to stock markets, you can clearly see the difference. So a drawdown for a professional trader, say, I'm not talking about me, I'm talking about a random professional trader. A drawdown for such people would be controlled risk, or maybe they already know what that drawdown is. Maybe 1% or 2% risk for every trade. For retailers, especially the new ones, the drawdowns would look like 10% down, 12% down, or maybe what they would do is they would just average down on their particular position until they see a green number in their portfolio. But what's important to see here is drawdowns are not accidents. They're a part of the game. So if I talk about my own personal framework, I work on protecting my capital first. I believe protecting capital is important. Profits can come later because protecting capital makes sure that you are in the game to win. If your capital is wiped out, you're out of the game. How will you win there? Right? So protecting capital is something which I focus on. So whenever I trade, I define the risk before I enter.
Okay.
If I don't know my downside, if I don't know how much am I losing in this particular trade, I won't take that trade at all.
Okay.
Secondly, I'd focus on position sizing. I don't let just one trade decide my outcome or decide my fortune. Even if I'm wrong, the loss is always controlled and the portfolio will always survive. Okay. Because the goal, again, it's not to win every trade. The goal is to protect the capital so you can stay in the game long enough to win. Finally, if I have to, during drawdowns, I reduce my trading activity. It's not like, suppose if I'm taking, for example, if I'm taking 10 trades in a day and I face a drawdown, or maybe my trade did not go well as I planned, I would just step back, recalculate everything, rethink about my entire system, pause my trading activity, trade less, wait more, and focus only on high conviction setups. Now, how does conviction come into place? Conviction will come only when you have the right exposure. We have talked about this earlier as well. talking about Instagram reels, talking about how people promote their services or maybe promote their profits on social media. That is just giving you information. If you trade in the markets regularly, that is how you will build conviction, right? And the most important point that I follow from day one, and I really insist on every retailer to follow, please do not fight the market. If the setup breaks, you should exit the position. You don't have to average blindly. You don't have to be emotionally attached to your trade. The market doesn't care about your opinion, so don't argue with it. At the end, I would repeat, survival is your priority. If survival is something that you are prioritizing, profits will become a byproduct. Just like how it is with studies. If you have to focus on the right thing, if you have to focus on the right concept, the marks in the exam would just be a byproduct.
Wow. So I don't know whether I can ask this question. Can you please give us an outline about what sectors in India that we should focus on for building? I mean, or I'll put this way: is quietly building a long-term wealth and is good for building wealth. So if you want to focus on certain sectors, can you give us a few tips on that, sir?
Sure, definitely. So I'll just keep it to the point because this is something which I'm really talking about these days on multiple platforms.
Okay.
So for India to consistently outperform, maybe just for long-term wealth, or maybe if you're just focusing on the India growth story, again, there are multiple sectors that you can focus on. Infrastructure is one, defense is one, or maybe if you guys are focusing on it, you can focus on pharma and healthcare.
Okay.
Now, the reason why pharma and healthcare is one of my personal favorites, by the way. And
Okay.
just a quick disclaimer, I do have pharma and healthcare stocks in my portfolios. So
Okay.
any retailer who is looking to buy any positions, please be mindful. So
Okay.
the reason why I really like pharma and healthcare is because of a very simple ideology.
Mm.
Does not matter if war is happening or not. Doesn't matter if any pandemic is coming or not. Doesn't matter if aliens exist or not.
Mhm.
People are not going to stop getting sick, right? Even if the market is volatile, people would still be sick. They would still go to a hospital. They would still go purchase medicines. And the reason behind it is also very structural. The population is aging, right? Back in the days, maybe say 5, 6 years ago, or according to the last census, India has a lot of the highest number of young people in India. That's the highest in the world, right?
Yeah.
With the time passing over, aging would happen. जो आज 30 years के है, in future they will become 40 years, 45 years, right?
Ji.
So aging is natural, and as you age, you get certain diseases over time. That's not because of your habits. It's natural. You get specs because of poor eyesight. Maybe you get diabetes if you consume a lot of high sugar content, right? So these are some of the key factors that are going to happen, right? Healthcare awareness is again it's rising. A lot of people are becoming aware that okay, if you're not well, you have to visit a doctor, you have to get medicines. And of course, a lot of pharmaceutical companies, like if I have to name a few, Dr. Reddy's Laboratories, or if you say Cipla, Glenmark, these are some of the pharmaceutical companies that are actively indulged in export opportunities. They have their medicines that they export to the US, to the Europe. All of these points that I just mentioned, aging population, healthcare awareness, and export opportunities, all of these are not some flashy things or something that people can just, get entertained out of. These are structural and things that are consistent, right? So that is why pharma and healthcare is one of my favorites. The second sector which I'd like to focus is on defense. Again, no matter if war happens or not, if pandemic is there or not, countries will still prepare for conflicts, even in peace times. If you have to look at the budget, the Indian government's budget, right? I read somewhere that the Indian budget is the most talked budget across the globe, right? Because again, India is the largest democracy, so our budget is always in the limelight. India has been preparing for conflicts from several years. Every year you hear that okay, itne 1,000 crores ka allocation is for defense equipment, itna crore is for say some other ammunition or some things of that sort. We constantly get our fighter jets replaced. This is something which is not going to stop. You buy an equipment, you buy an ammunition, वो ammunition का expiry date होता है. Even if you have not used it, you'll have to replace it. So defense is one theme जहाँ पे growth is going to be constant. because equipments, they need replacement, technology keeps evolving, and governments, they're spending continuously. So these are the two themes that are not short term, they are long term in nature. So if you have to build long term wealth, these are the two sectors that you must focus on.
Fantastic. So that's quite a tip. Now everybody is going to go and draw their attention towards that. And by the way, guys, if you want to know more about investing in sectors like technology, and a lot of insights has been shared by Arjit ji in his Instagram, just go check it out. So the big question from my audience to you, sir, is if someone who is watching this podcast wants to work with you, wants your guidance, so how can they go about in a right way without deviating from SEBI regulations?
Okay. So one, I would say disclaimer or something that people should focus on. And before joining anybody, I'm not talking about just do it before you're joining me. If you're just looking for recommendations online, always watch out for people who are giving you guaranteed returns. The moment you just read or you hear guaranteed returns in their services, just block them, report them, and just stay away from them as much as possible. Guaranteed returns is something which is not just it's not just illegal, but it's not possible in the markets. You cannot tell anybody ki, yaar, I'll give you 10% every day. It's practically not possible. You don't know every day where the markets would go. So if someone wants to work with me, the first thing is you'll have to do it through a proper regulated system. So as an year that you'll have to create something, we have created a regulated system and structure for you. Everything that I do is aligned, and they align by the guidelines that are laid off by Securities and Exchange Board of India, which means there are no informal tips, there are no random tips. In fact, there are no random tips and there's no informal advice that we're giving. Everything is structured, research backed, and process driven. The best way to get started is by visiting our official website, which is dailyequity.in. That is where you'll find our research offerings, you'll find our structure and onboarding details. And if someone just wants to understand how we think before we give out our particular recommendation, you can definitely explore our work on Instagram and LinkedIn and multiple other social media platforms. Because my goal is not just to give you ideas or not just to give you recommendations. My goal is to build informed investors in India. See, I come from the days when the COVID thing was just beginning. At that time, there were a lot of people, even now, there are a lot of investors who are not informed. They don't know about what is right, what is wrong. So since 2020, my aim has been same, making sure that financial literacy is there in India. A lot of people, they get financially literate, and a lot of people really get informed about what's right and what's wrong. Now, if that's an approach that resonates with you, you can definitely connect with us through our official channels and platforms. But always regulated, transparent, and process driven.
And with permission, I'm sharing everything in the video description, sir. So coming to the end of this podcast, this is one of the fantastic podcasts with lots of insights. Like there is a quote which I remember by Robert Arnett, which says, in investing, what is comfortable is rarely profitable. From your conversation, we understood that we should be very balanced. We should make controlled mistakes. We should not deviate with some kind of random information or tips. We should have a structured regulations to follow it, a procedure to follow, and also make long-term investments, be patient. All these things combined. This is wonderful knowledge that is shared from you. We are very, very grateful for this conversation. Thank you so much for being here. We had wonderful time with you, sir, and have a wonderful day.
Thank you so much. I really hope all of the retailers are actually like they get educated and they get some of the other insights from our podcast and our conversation today.
Definitely.